Welcome back once again for this month's Blue Bindi session. I'm pretty sure this topic for today is something all of us, we engage with every single month, but we rarely pause to understand what is it all, what goes around, and all of us would know about our salary. Most of us know what is the CTC because that's something we are given when we join any new company, right? Uh, and we know what we get every month in hand. We all keep a track also because now during JFM, January, Feb, March, there are times your tax calculations happen and experience, certain amount getting deducted there, and you wonder what just happened, because you have in mind that every month this is the amount that comes my in hand, but rarely do we get into understanding what are the components, what's happening, where's the confusion, what are the assumptions. And then you keep thinking, okay, ye hoga, CTC is a bigger number, this is what I get in hand, so this is what I track. But today, what we plan to do is we decode the entire salary slip for you, understand the salary structure, and how understanding this can help you save better and eventually invest better, right? So before we start, we were again trying to understand, what's the data available around? What do people actually do? Or are we just assuming that people don't know or they don't pay attention to their CTC components or, what's that goes into their salaries? So we came across that nearly 65% of Indians who are working, irrespective of the gender, they don't fully understand their salary structure beyond what you get in hand, every month the salary that comes in. But apart from that, people don't understand, 65% of the audience, they don't understand the salary structure. Over 50% delay investing their first 5-year earning. Okay, so we've heard that, when you start earning on your first job or you've started something. So the time you start getting that first earning, you should be saving, investing, but more than 50% of people delay that, they just figure, okay, abhi to let me just enjoy. I've started working. I'll see, I'll look about, I'll think about it and I'll start investing. Let me just first live my life. And, the way I was waiting for my income to come in. So let me just focus on that and I'll plan my savings and investments later. And lastly, despite earning independently, women are likely to, say 20 to 25% are likely to invest lesser in, even though they might have clarity, even they, if not clarity, they know they want to. But what the trend says is that 20 to 25%, they would still take time, specifically for the women audience. We'll take time, we'll think, okay, we'll do it later. We'll discuss, we'll come back, we will see. Okay. So that's something we don't want for our audience. So that's the reason today we have Sailesh with us. And we've planned out, we've talked out the entire plan for the session, what all we'll cover, what all we'll focus on. And at the same time, today we would want, all who are attending, if you have any questions specific, I mean, you can obviously not give out your numbers, your details about your salary, whatever, but if you have any specific question, then towards the end of the session, do, unmute yourself and go ahead and ask Salish your doubts, your queries. So, during the session, if you have something in mind, note it down. Again, when we start the Q&A, please go ahead and ask your question. Okay, so before we start, I'm going to call Moin again. I don't know what has he prepared today, all the questions and his multiple answers. So Moin, over to you. Let's see what's in store for us today.
Hey, hi Ritika, everyone.
Hi.
You can hear me?
Yes. Yes, I can hear you. I don't know about the rest.
All right. So today, for a change, we are not doing the quiz segment for our audience.
Okay.
Yeah. So no rapid fire questions, no pressure. But we have something for Sailesh and you. We have one important question to ask before we begin the session.
Yeah.
Okay. It's obviously related to the topic for today's session, which, by the way, is actually a very interesting topic, and I'm sure the audience is really curious. So, are you ready, Ritika? Are you ready, Sailesh, for the question?
No, I
Yes,
would want to
Main.
give a disclaimer.
Go
Is
ahead.
there any right or wrong? I would first want Sailesh to answer, then I will come in.
No, no, there are no right and wrong answers. There is no option for you to say all of the above. So, there are no options actually. It's just one question I ask and you answer.
Okay.
All right. So, the question, it will not be on your screen. This is not KBC. The question is, why do we call it a salary slip? Why not a salary statement or a salary summary?
I'll go first.
No,
Yeah,
you want
please.
Ritika to go first.
No, I don't know. Why do you call it a salary slip? I didn't go and check the definition, but yeah, I mean, any slip, right? It's like a paper, it's a document that has the details. So yeah, maybe that's the reason. I don't know. Salish, please help. Expert.
Sailesh, do you want to attempt?
Yes. So, in the earlier days, I'll give you the true what I understand is why this term came into being.
Mm-hmm.
One is that in the earlier days, when the salary was actually given in form of currency notes or check. So
Okay.
every day, every time, every month, the employer used to give a packet which contained your salary with the currency notes, and there was a slip inside it which told you how much is your salary and how much is your deduction. Okay,
Okay.
so and when after things progressed, it was given with check. So with the check, there was a slip attached which said that this is your total salary and these are your deductions, and this is what the net amount is for which the check is attached. So that was the slip. Now, Mohan also mentioned why is it not called statement. So if I'll get into the little bit of English over here, slips are small statements, small note. Statements are, obviously long statements, if I have to,
Yeah, you're not
I hope
getting a
that you
lot of
get the
money.
message. So it's not a salary statement, it's a salary slip. So,
So, I don't know what to say. Sailesh has actually proved why he's the expert. But but our answer is a little different. Okay, salary slip. The name is the most accurate name it could get because salary doesn't stay; it slips.
Oh my God.
Okay, I know all of you could really relate very well to this.
Yeah,
Okay,
yeah.
keep thinking. And on that note, let's get the session started. Let's understand our salary structures and how we can build wealth. So, thank you. Over to you, Ritika and Sailesh.
I'll just add to what Moin said. By the time, when your salary comes, by the time you admire it and you are happy, it slips. It's already slipped from your hand. There are, SMS with debits coming in.
Story of our
Oh,
lives.
oh my God. Okay.
I'll
Perfect
be back.
definition, both of y'all. Yeah, yeah,
I'll be
great.
back with another question next time. Until then, thank
Thank
you.
you. Looking forward. Thank you.
Thank you.
Okay, great. So before the salary, I mean, before we get even more interesting answers for salary, what is a salary slip? Why a salary slip? Salish, let's get into understanding and let's decode it for our audience that what is it, what is the entire structure, what is it, and, let's get the discussion going. And then towards the end, as I mentioned earlier, we'll get audience to come and ask their relevant questions. Okay. So before we go forward, this is something at least I have faced. I'm pretty sure. Let's do a quick reality check with everyone here. So, what was your first salary expectation? I'm pretty sure all of us had something in mind that I'll start my job. This is what I'm going to get. And if this is the CTC, I was aware that, okay, this is what my expectation would be. Then that is CTC, all of that coming in. Then you get the shock of your life. What did you actually receive? So you get the CTC, and then what actually came into your account the first month that you complete wherever you're working. So I was confused when I got my first salary in my account, and I think most of y'all would have also had that uh, experience in some way or the other. And the other thing that came in was when I got the slip. the statement, whatever you call it. I was confused. I didn't understand that, there were a lot of things that were there, and I didn't know, because I was given the CTC amount, and I imagine now, divide it per month, that's going to be my earning. But unfortunately, that wasn't the case. And I'm pretty sure most of us would have, like, somewhere or the other experienced it. So, Salish, let's start with, sort of the reality check that's done. Let's go and dive into understanding what is the entire structure of a salary slip, what are the components, what all do we need to understand, and why do we have the left and the right, everything. So let's just start with that. Do I have the control of the slides? No. Can we go to the next slide? I don't have the, now I have.
Yes.
So let's get going, Salish.
Okay.
Hanji.
So the first part that we're going to talk about over here is, understanding, or like we said, decoding your salary slip.
Mm-hmm.
Okay. So if you see over here, there is a, dummy salary slip, and we're saying that on the left hand side, you'll see what are your earnings total. So what basically this is what you've earned. And on the right
Correct.
hand side, there are deductions. Okay, so some of these are regulatory or compulsory deductions. So if I have to say your basic pay is what is there, then you
Mm-hmm.
could have taken HRA as your house rent allowance. Now this may not be true for everyone. Those who are living in a rented apartment may be claiming an HRA, but in that case, they may, if that is not there, then HRA may not be part of this. But a lot of people do claim HRAs. Then there is special allowance which you get. Okay, so those could be. This is again a very critical component. So the left hand side is your total earnings.
Mm-hmm.
And obviously, if you are earning, you have to pay your tax. So TDS is
Mm-hmm.
there, 8,000 rupees shown over here. That's your tax deducted at source. There is something which is regulatory professional tax everybody has to pay. That's your 200 rupees every month that gets deducted. And employers have to deduct contribution to the provident fund, which is typically 12% of your basic salary. Okay, so if the total salary is say 50,000 rupees, then 12% of that will be your PF deduction. So if you see over here, the total earnings minus the total deductions is your total take home pay. Okay, I think yeah.
Sorry, this is just moving, huh? Uh-huh. Let's go back to
Okay.
the screen one.
Yeah, just can you go back to the previous one? Yes.
Yes, the first example. Or this one only? The three bucket model?
Yes,
Yeah,
yes,
okay.
yes, yes. Okay. So your basic salary, your DA, it can be a dearness allowance, it can be HRA, that's a house rent allowance, and other allowances are what is paid to you now. Okay, this is what you take home. Okay, your employer's provident fund contribution. Now, employers, like I said, it's a regulatory requirement. They have to deduct this, 12% of your basic salary as a deduction. So that gets deducted. And apart from that, the employees can also contribute to the provident fund. Okay, so they can, obviously they can get take a higher deduction if they want. There is no mandatory that they have to do 12% only. They can do 15%, 18%, 20%, depending upon how much they want to get deducted. Some companies also do a deduction as a part of the gratuity. Now, I am sure everybody knows what is gratuity. Gratuity is kind of a token of appreciation that is paid to an employee at the time of retirement or when they leave the organization.
Mm.
Uh, but this is paid as per the Act, Gratuity Act, only if an employee has worked continuously for 5 years. Okay. So if somebody is
Mm.
leaving the job in 3 years, then this gratuity is not going to be paid. Now, this is the cost to the company because the company is paying you this money. Okay.
Mm.
So they are within their rights to deduct this from your CTC. So what happens is a lot of the companies are building in this cost into your CTC. So the total cost includes the employer's contribution to the PF, and there could be contribution to the gratuity. And similarly, there are other contributions like the superannuation fund also. Okay. Now, these are certain deductions that happen, but these are saved for you and these are paid to you later. Like a provident fund will come in handy
Come to.
when you are going to retire.
Correct.
Okay. Now, your provident fund you will not get when you leave the job. Typically, you will get it transferred to your next employer if you're leaving the job. Gratuity will be paid provided you have worked for 5 years and more continuously. Superannuation is typically paid at the time of retirement. Okay, so
Okay.
this is something that is paid to you later. Okay,
Mm-hmm.
and a part of your salary or the CTC is paid to the government because you've earned this income. There is a tax that is deducted at source. There is a professional tax. So this is how the breakup of your total salary is, or the CTC or the cost to the company is. When we look at it, this is how it is broken down.
Mm. So, Sailesh, one thing here, I don't know if the other. So, when the employer is on monthly basis, um, putting that X amount for the PF. So, obviously, when this gets invested, and whenever we get the money, obviously it gets multiplied and then it comes to us, correct?
Right, right, right.
So, ठीक है, if you are not saving some, at least some saving, some investing is happening.
Yes, I am, and I will also go the later slides why these deductions are done. So because we also would like to talk about savings and wealth creation in this
Mm.
conversation. I'll touch upon that why these are very important. For a
Mm.
lot of the employees. Okay, so
Mm.
I will just go to the next slide. Uh, can you change that? I think. Okay. So let us understand your salary slip with the help of a illustration. Okay, so here we have taken an example of someone whose CTC when they joined the organization, it is 12 lakh rupees. They were told they will get 12 lakh rupees a year. Okay, so if you have negotiated something like this with your employer, you will be happy that your salary is total 12 lakh rupees. So that's the cost to the company. So
Mm.
when you get their letter in hand, this is a breakup. Typically, you will get that your basic is 5 lakh rupees, your HRA is going to be 2 lakh 50,000 rupees. Your special loans will be 2 lakh 50,000. Bonus will be 1 lakh. Employer contribution 12% of basic, that is 5 lakhs is 60,000 rupees. Gratuity is deducted at the rate of 4.81 of the basic, so that's 24,050. And there's an insurance cost. So I'm sure many people are not aware that many companies provide life insurance cover to the employees as well as health insurance cover. Now this is something
Correct.
very important which should be kept in mind. So we have taken for illustration purpose, insurance cost is the health insurance cost of 15,950 rupees. Okay. Now, what is the total deduction? Basically, will go out of this 12 lakh rupees. There is something
Mm.
which is known as the employer's provident fund contribution. That's the
Mm.
60,000 rupees. Gratuity will be 24,050 rupees, and the
Mm.
insurance cost. So this is something, insurance cost is an expense, so it's not going to come in your hand. Okay,
Correct.
so gratuity is, like I said, will come after 5 years if you provided you stay
Okay.
put in the organization for 5 years. And employers contribution to PF plus if the employee has contributed whatever is there will be paid at the time of retirement. Okay.
Mm.
So
Mm.
what is the total cash component of this 12 lakh is only 11 lakh
11.
rupees.
Okay.
Okay.
Mm.
Now, one second. So total, if you see, there is, why we taken 10 lakh rupees, the monthly, if I have to break down this amount, I am going to get 11 lakh rupees, but there is 1 lakh rupees as a bonus. Okay. And many times the bonus comes at the time of, at the end of the year. So you are going to get only 10 lakh rupees in hand. Okay, right now. Okay, so if I divide that 10 lakh with 12 months, it comes to 83,333. So is
Correct.
this your take home? Not really. What gets deducted from this? Again, I will, talk about that. So if I say over here, if you look at it, your pay slip will look something like this. The 83,333 is
Mm,
basically divided into basic pay, HR and special allowance. So this is your earnings. And from
mm,
there, your PF is deducted 5,000 rupees, professional tax is deducted 200 rupees, and the TDS. So what is the total deduction is 13,200 rupees, and in hand you will get 70,133 rupees. So this is the take home pay. Okay, this is
mm,
what you are going to get a credit in your bank account. So that is why there is always a gap between your CTC and the take home. Now, many people will be aware that the total CTC is say 12 lakh rupees, but they are pleasantly, or I'm not sure, many people are very pleasantly surprised, but sometimes they get a shock also that, oh my God, I thought I'll get 1 lakh rupee in hand, but I've only got something called 70,130 rupees. So where is the remaining 30,000 rupees going? So they are
mm,
not, blissfully unaware that there is a PF deduction, there's a gratuity deduction, there's a premium deduction, there's a
mm,
professional tax, there's a TDS. So all that has gone away in the, to arrive at the in-hand salary. That's the difference.
mm. So that I think that's what we were talking in the slide one, what we were expecting versus what we get in hand. And so I
Correct.
think with this example, we are able to understand that. Yes. Yeah.
Yes, I hope the audience is able to follow the structure, and I'm sure many of them are going to go back and check their salary slip today,
Mm,
to see whether, because many times people over here have come and asked me that, you know is there a possibility of an error on the part of the HR to deduct extra, or did I, if I had misunderstood the CTC part.
mm,
So, it is important to, understand what is a CTC and what comes in your hand, so that, next time if you have get a chance to negotiate or something, you're in a better position.
true. Correct. Yes. So now that we have understood the structure, the anatomy of the salary slip, uh, now moving forward to understand how these deductions and overall what one should do to understand how we somewhere or the other are bringing in the wealth creation, wealth accumulation initially and then creation for us, with whatever we get in hand, what we save, how do we move forward, so how does our behavior get shaped?
Yes. So, I have many times, people come to me and also ask, like, what if I, don't get my PF deducted?
Mm,
Okay, is there a way, the gratuity provision can be removed from my take home goes up. So
yeah.
sometimes it could be genuine, necessity for people to have an extra take home,
Mm,
or some many time people just want to take the shortcut, and they want to, don't want such a low in hand salary.
mm,
But the way I understand is that there is an element of wealth creation that is already there, and in India we don't have social security benefits like the developed countries. So one definite retirement benefit that we get over here, or something that basically can be useful in one's retirement phase of life or old age, is a
mm,
provident fund. Okay.
mm,
Even gratuity for that matter, because in India we've seen a lot of people working for long many years, and also eligible for gratuity. So
mm,
my request to people would be that PF is an very integral part of your saving. It's a forced saving in a way, and
Mm,
it is one of your retirement benefits, and it creates your long-term retirement corpus. And more
mm,
importantly, because there is a monthly deduction that is happening, and
mm,
because your employer is contributing and you are also contributing, it is like a mutual fund SIP that is going on, and the interest is again 8%, and
mm,
it keeps varying every year. The government decides what is the rate of interest. It can vary, but
mm,
you are getting something which is very safe and assured, and it has a compounding effect. Of course, the rate of interest uh, relatively could be lower if you compare it with a equity fund or something, but this is
mm,
something which is there. And you are going to build your retirement corpus over the next 25, 30 years. So it is a really a good way to enforce discipline and create that saving habit. Normally, we tell our investors or all my colleagues that you need to do SIPs, but that
mm,
really doesn't happen. So that is one thing. Gratuity again is a part of your retirement benefit, and
mm,
there is something other than there. Then there are superannuation fund that people get. There are leave encashments a lot of organization pay, so your accumulated leave is converted into cash and paid to you at the time of retirement. So a lot of people get those benefits, and together that becomes your retirement benefit. So I would
mm,
urge people to not stop their so their PF contribution. They should continue. In fact, I've seen in the earlier years people actually going for higher deduction. So when they
mm,
build their corpus and they're nearing retirement and they're comfortable, or if there are two people working in the same family, husband wife both are working, then they have opted for a higher cut from the salary
mm.
just to increase the amount of deduction to the PF.
Yeah, interesting.
Yeah.
I think while you were saying somebody's asked a question, but we'll take that during the Q&A. We've seen it, it's come in the comments. So we'll take it's around gratuity only. So we'll do that during the Q&A part.
Okay. So let me just go to the next part. So, we've just taken example over here. I think, this should be 5,000 plus 5,000. We just sticking to the example. And,
Mm,
you can, depending upon whether it is 8% or 8.5%, you could make
mm,
something close to 60, 65 lakhs in your,
yeah.
over. So if it is 5,000, like in our example, and you add another 5,000 for the employee, then it becomes 10,000 rupees. And, over 20 years, 20, 30 years, this could be really a big amount. The idea is,
True.
not to ignore the compounding
Counting
effect over
effect.
here.
True. Though I feel a lot of us must have faced that issue to go and check on the portal your PF total, if you've switched organizations, so to get it linked and all, I know at least I have faced issues. But yeah, but as you're saying, compounding it will come into play. So it's good, it's getting saved for me and it's multiplying for me.
Correct. Now, there is one point that I would like to also add over here, Ritika, and people should make a note is that EPF returns are close to 8%, and like I said, every year the government resets this, but it continues to hover around 8 plus,
Mm,
maybe 8.1 or 8.25, depending
mm,
what the interest rates in the economy are, but it
mm,
is higher than your long-term inflation average of 6 to 7%. Today, India has a long-term average inflation rate of 7%.
mm.
So it covers inflation. Most of us struggle with when we go to a bank and put a FD. You will
FDs.
agree that the rate of interest is around 6.5, 7%. It barely meets inflation. So this
Correct.
investment that is happening is safe. It is tax-free. Now, of
Mm,
course, there are conditions up to which it is tax-free. But
mm,
then, you will have to appreciate the fact that it beats inflation and without
Mm,
risk. And because in retirement is the longest goal, most of us will work for at least 25, 30 years.
mm,
This is a good, investment. It's the forced SIP, though growing at 8%. It is, very important element of your wealth creation. So it's a,
true.
that is why it also becomes important to decode or understand your salary slip, because it is a very important document basically, which could be your your blueprint, if you can understand it for your entire retirement planning.
Correct.
So yeah, but also I would like to add here is that your PF alone may not be sufficient to build your retirement corpus. And
Mm,
I think we have done multiple conversation on Blue Bindi sessions that you need to have additional investments through growth assets. Normally we call it as equity funds. So you need to also parallelly run SIPs in mutual funds or equity funds, because
mm,
there the potential is much higher than 8%. And if you're building a retirement corpus, then merely your EPF contribution may not be sufficient. You need to complement it with something known as the mutual fund SIPs. That is
mm.
when you will be able to build a sizable corpus that
Purpose
could
well,
last
right.
a lifetime.
True.
Yeah. So that was the important aspect of your salary slip. So we all may be very tempted not to get those deductions done, but I am sure everybody will appreciate after this conversation. That's a very critical part of your wealth creation journey.
True that. Yeah.
So now I'll just touch upon something, you know, very important. So assuming, now you understand what is your CTC and what you get in hand,
Mm,
we'll talk more about how do you proceed from here when it comes to savings and your wealth creation. So one part is obviously taken care of through your EPF and all. The
mm,
second part is that, how do you spend this money?
mm,
Okay. So obviously, once your salary is hit your bank account, you will start using it
mm.
for your fixed cost, could be rent, EMIs, insurance. Then you might go and spend on your household, groceries, utilities, lifestyle expenses, movies, dining out. Okay. So you need to also keep a tab on what is left in your bank account. So while we were joking that your salary slips away, okay, it's not you don't have to, you have to be very mindful that it some part of it stays back, and
Stays.
that is what we call as the savings. Okay, this is a very critical component, again, as a part of the wealth creation. So you don't have to be complacent that, oh, मेरे salary में से EPF कट गया, मैंने खुद का contribution कर लिया. That is not sufficient. What is sufficient over here is the savings, and you need to ask that question: what is the savings that you should have? A lot of people ask कि मेरा savings होना कितना चाहिए. So from a
Mm,
financial planning point of view, the thumb rule and the ideal rule that is that you need to have at least 40% saved over here. So if it is 70,000 rupees over here, and 40% will be 28,000. So ensure that at least you have 28,000. Now this is over and above your employer-employee contribution to the provident fund. Okay, so don't. Uh, so I'm just saying that over and above this is what you need to save. थोड़ा challenging लग रहा होगा. I'm sure a lot of people will say that this is not possible, and I can understand. You if especially if you have EMIs. For home, you bought a house, whether you have EMIs for vehicle. But I would like to also, to exercise caution that any of these expenses that you're doing lifestyle should not be on
mm.
EMIs. You are, going to fall into a debt trap very soon if you're going to spend too
Oh
much
my
of
God.
these lifestyle expenses on EMIs. So be very, very
Mm.
mindful of that. Yeah.
But yeah, 40, but the number is um Yeah, I mean, yeah, all of us, I think we all should go back and calculate what we are doing currently and get to a level or aim to get to 40.
Yes, the number that normally when we do a lot of these seminars and all, and we ask people, the average number comes around 20-25%, and it
Because,
gets people worried. But I can understand, but that, the 40 is the ideal. That is what I said. And then, you have to move directionally. It should be 40. You may start
yeah,
with 20-25 because it could be
yes.
quite, difficult for a lot of people to, straight away reach that level, especially if you are having a family and you have dependents and a fixed cost like EMIs and all. It may be a little challenging. Now again, just at the cost of being repetitive, I've said in the past that your EMI should not be more than 30% of your salary.
Mm.
Okay, so that again is a could be a very large number that one may be paying.
So you
Okay.
are, in a way, if anybody was planning or living with the term that is nowadays everybody that YOLO, you live only once and all that. So chhod do wo sab. 40%, 30%, tell it, what are we going to do?
Yeah, yeah.
Where are we going
I think that is just an excuse to splurge, YOLO and all. Okay,
to? Okay.
so I'm sure as people mature, they they feel the responsibilities. The reality sets in, and they get more serious with it. But like we
Mm.
have always discussed in the past that savings is a habit, and if you develop this habit at an early age, it is easier. Once you get habituated to a particular lifestyle, and you need to cut down on expenses, it is very difficult
Difficult.
for
Yeah.
people to
Yeah.
follow that path. So yeah, your investable surplus, like I said, is what is very crucial for wealth creation, and you need to look at that number. Now, I can understand fixed cost, commitments, and essential lifestyle costs cannot be compromised, but
Mm.
this is something very crucial when you're building your wealth. Okay.
Mm.
So let us see now, let's move on to the next segment where we, also summarize. At first, we started with the anatomy of a salary structure. We just understood, what is the difference between CTC and take home. Okay,
Mm.
how whether you should go for a, PF deduction or whether you should discontinue it. And also then, what are the steps to uh,
For some reason, okay.
yes.
It's come in. So this was
So
my favorite part, Salish. This one I really wanted, to for you to talk because
yes,
obviously you will explain, but for the audience, sorry, I'm just interrupting. I wanted this because a lot of us, have that okay, both of us must be earning the same level, but after some years, you see the other person at a different level vis-a-vis, the other one. And what you rightly said, 40% of saving, investing, that all that will bring in the difference. So yeah, this is going to be something important. So I would want everybody to understand and pay attention to.
exactly. I think if two people in an organization are working at the same salary, as far as wealth creation is concerned, there could be a difference.
Mm.
And that basically is all about not about the salary, but about the savings habit. And that is where it is
Correct.
very important. This habit is crucial for wealth creation. It's the first step, and it's a very crucial step. So, if you have really realized the importance of savings, okay, that and you start your SIPs early, okay,
Mm.
and you control your lifestyle expenditure, then you are in a much better position than, say, for example, we have shown person A who's something, it may sound very idealistic. So this person
Mm.
A is, really got the essence that their time is money, and she is really, really trying to get as disciplined as she can. Person B
Mm.
is little more carefree in life, wants to enjoy life. Maybe something like a YOLO has hit her, so she is waiting for a higher salary to start her SIPs. So she's saving randomly, and there is no urgency or clarity on surplus that how much hona chahiye. Jitna aa gaya. And
Mm.
that basically changes the game. Okay, the difference. So just to give you a perspective on what could be the difference. I just want to show you with a graphic over here. If you are doing an SIP of 10,000 rupees per
Mm.
month for 20 years, and you do it and you earn 12%, then you are easily going to accumulate 1 crore in the next 20 years. But if you delay it by 10 years, okay, and when most people start, why we took this age 25 to 35 is because I always say that 25 to 35 is your power play. Okay, and if you miss out on this power play of this 10 years, so if someone who realizes that at 35, uh, that person is only going to accumulate close to 25, 23, 24 lakh rupees. Okay, even if they do 10,000 rupee SIP and continue for 10 years, because they've lost that 10 years. Okay, that 10 years is going to cost at least 75%. That is the cost of delay, and this is mathematics. And those who have done SIPs will relate with what I'm trying to say over here. So this is something people must realize over here, that every day lost, if your money is not working hard, okay, you are reducing the power of compounding. 10 years is a colossal waste. I don't think so anyone can afford to that. So I'm, for all my younger colleagues and friends on this webinar, if
Mm.
you have not really started your SIPs, please go and do that. I'm sure if you are at 25, you want to be in a better position, but you're already at 35 also. Don't have to fret. You don't have to worry. You still have another 25 years to retire. Okay.
Or
You can
or
still
wait
cover up.
for a time machine to come into existence and
Yeah,
go
but don't
back to
wait for the
retire.
next appraisal. Okay.
Yeah.
And in the past, we have discussed, even if you get your hikes, you may feel that kuch mila hi nahi haath mein. So that is going to be the same story, because there is something known as lifestyle inflation or lifestyle creep, we call in,
Cheap.
yeah,
Yeah.
the your expenses grow equally with the hike that you get. So you might feel, अरे salary तो बढ़ गया लेकिन saving तो बढ़ा नहीं. So the problem is not with your salary or appraisal, it's probably with your expenses and your
Pendulum.
savings
Mm.
habit. So
Interesting.
I'm sure people have got the gist. So we've slowly progressed from understanding your salary and your salary structure uh, to wealth creation. How it
Mm.
works. But that savings number is very crucial,
Yeah.
and time is of an essence over here. So I'll very quickly go to the last. I think this is the last segment, and
Mm.
your salary hike and strategy that I was talking about, that about your appraisals and all. Okay, so if you get your salary hikes and you feel
Mm.
that you know it's you don't really feel the change, in your savings, then you need to
Mm.
follow a thumb rule. Okay, and like I said, the thumb rules are thumb rules, but very easy to remember is that if you have got a salary hike of 10,000 rupees a month, then you need to divide that money into 50 30 20 ratio. This is a rule, thumb rule of 50 30 20. We say that 50% can be spent, that out of that 10,000 extra, you can keep aside for household. So your budget should not exceed 5,000 rupees additionally
Mm.
monthly. For your
Mm.
lifestyle expenses, you can keep aside 3,000, and 2,000 can be your additional for your SIPs, additional SIPs that you will
Mm.
do. Now,
Mm.
some somebody may ask that you mentioned that
40.
40,000, 40% should be a savings. Now I'm taking a very realistic case, and this thumb rule has been is very recent. It's not something which was made in 1940s or 50s. It's
Mm.
more recent, not very recent, but from what I have read, it is somewhere it was evolved in 2005-10.
Mm.
And there that takes into account the realities of our current lifestyle, where we are all attuned to higher household expenses and lifestyle expenses because we have our EMIs and all, and
Mm.
therefore the saying that for every you at least budget 20% as a part of your savings. So even if you have got say a salary of 1 lakh rupees, you could
Mm.
divide it between, this is the boundary. Maybe 50,000 can go for household, 30,000 could be lifestyle, and 20,000 could be your SIPs,
Being
but
investing.
don't exceed that maybe, and bring down your lifestyle and increase your
Mm.
SIPs. So 30 and 20 can be adjusted, and perhaps if there is scope for 50% to also do reduce so that your savings can go up.
Mm. Tough one, but yeah, I think 40 coming down to 20 is even more realistic. So yeah.
So,
Yeah.
just to put into perspective what we just discussed, and how do you create wealth out of your salary? Having understood your salary slip, the whole purpose was to, make you aware that while you may have an very comfort level about your CTC, you have to understand
Mm.
that a large component goes away as a part of your salary, TDS, taxation, and some of it goes in, say, your medical insurance premium. So, knowing what is there in your hand is very important. So keep a track of your expenses. Like we said, you need to really get to a better savings level.
Mm.
Uh, and automate your investment. EPF is kind of an automated inbuilt discipline. Similarly, link your salary account to your SIP account so that money is automatically debited.
Mm.
People ask that, should is first of the month good day for SIPs. If you can, if you are very sure that your salary hits your account before first, maybe you get it on 30th or 31st, and there's, and money can be straight away debited from your bank account on the first, then you can do
Mm.
that. Then there are SIP dates which can vary from 5th, 10th, but
Mm.
don't, at least link it so that the money is automatically debited. That creates discipline. And like I said, with every increase in salary, increase your SIPs.
Yeah.
So that's the trajectory, that's the framework uh, for creating wealth from your salary income.
Well, perfect, Sailesh. Very simply put. I mean, this chart also what we're seeing, it's very clear. Understand what you're getting. Keep a track. Calculate how, where you can invest, and make sure. I think the last part is very important, that when we all look forward for the appraisals, we look forward to the bonuses that come in. But if we are very clear, we've done our calculations and we've thought over it, that 50, 30, 20, if I could, keep that thing in mind and divide the amount. So uh, I'll be in a better position to see the wealth growing for me and not hope
And
somebody's
I
gonna.
think one part I didn't touch upon, it was on the
Mm.
insurance premium that gets deducted.
Mm.
So a lot of people are at ease that, okay, I've got a medical insurance cover from the
Yeah.
organization,
Mm.
and it may not be sufficient. You need to go back and check your insurance policy and
Mm.
see, while you're paying premium, it's part of your CTC. You also need to be aware that what are the benefits, what kind of, the policy details need to be known
Mm.
to you,
Mm.
and understand that whether it covers your family members or not, whether it is
Mm.
only you or your spouse, or your dependent parents also covered. But if you've not, if it is insufficient, when I say insufficient, if a cover is something like a 3 or 5 lakh rupees, then it will be definitely very low on the sum insured. So you need to
Mm.
go and buy your extra insurance cover also. So, but since it is there as a part of your salary, uh, it is good that it is there. So there is an EPF that is taking care of your retirement. There is an insurance taking care of your risk on your health. And also do go and check your life insurance cover.
This we had covered, I remember, when we did the session during in on insurance. So yeah, we will share the entire links of the entire sessions we have hosted on YouTube. So if anybody wants to, refer to that. But yes, that's equally important. So
Yes,
yes, go ahead,
I
Sailesh.
think
This
the
was
financial independence, is something that is a widely used term today. And people want to be, while they're working, they want to be financially independent.
correct.
So and I think if you are aiming for financial independence today, then you need to start with understanding your first income document, which is your salary slip. So I think we've done justice to this topic, and people would have really got a gist of what the salary slip
Yes.
look like, and what are the essential components, and they'll be in a better position in case they are running short of the surpluses or the savings.
And I hope, Moin, now you've understood, and the next salary that comes in to your account doesn't slip. And you've truly understood the definition of a salary slip with this. So, okay, now the interesting part. I think somebody had already put in a question, so we'll start with that. The rest of y'all, you can just raise your hand or let us know if you are okay to unmute and you would want to come online and ask. But Salish, we'll quickly start with the first one. I think when you were talking about gratuity and PF, Ruchi had asked that after 5 years, do we get the gratuity amount with the salary?
Can you just repeat that question, Ritika?
Yeah, it's after 5 years, do we get the gratuity amount with the salary?
Yeah, so if you are leaving your organization, and the important word here is after continuous employment. Okay,
Hmm.
that is how the act puts it. After
Hmm.
5 years, I think it is 4 years, 240 days to be precise. That is,
Hmm.
so even if it is not full 5 years, be very careful. Uh, okay, but after 5 years, yes, that's paid as a part of your full and final settlement. So while you will, if you're joining somewhere else, you can ask for a transfer to the next employer, the PF account, and the gratuity is something that will be paid to you.
So, Ruchi, yeah, if you are completing 5 years or you've completed 5 years, so you will not get the amount with the salary if you're still employed with the same organization. If you leave the organization, is when you get the gratuity amount. It is not that you've completed 5 years and you get it the minute it's done. So when you leave the organization is when you get the amount.
So if you
Correct,
leave after
Ellen?
7 years, you get a higher amount. You leave after 10 years, you will still get a higher amount. Okay, so it is based on the number of years you have worked with the organization. So 5 years is the minimum you need to work.
So, Ruchi, wish you all the best. Continue working wherever you are. Next one is how much medical insurance amount is sufficient? Is it required to keep a term insurance as well? This also we've covered,
Okay.
yes.
So term insurance is life insurance, and health insurance cover is independent of that. Both have to be there. So if you are someone who is the breadwinner of the family, and there are dependents on you, then you need to have a term plan. Okay. Now I'll give you the thumb rule again for that is around 15 to 20 times of your salary is your
Term plan.
assured for your
Mm.
term plan. Now coming to life health insurance, there is no thumb rule as such, but you have to understand that you need to take it way when you're young, when there's no health conditions. Okay. When I say health conditions, I mean, some popular, very common health, lifestyle diseases like diabetes, blood pressure, thyroid could come in your way of getting the adequate health insurance cover. Okay. Now, what is health insurance cover? Uh, Generally, we say that people get more diseases when they start growing old. Okay, so your health insurance cover need to be adequate from a future point of view. And why should you buy young? Because you don't have health conditions, and hence you should buy because the policy should continue. If you're 30 years, you should go ahead and buy your health insurance cover. But at 45, suppose you want to go and buy a cover and you may not get it. Suppose you got a very serious condition like a very high blood pressure or any disease, and you might be denied a cover or a adequate cover. Uh, how do you judge a cover? So you should see that what is the kind of expense one needs to pay for treatment for very critical illnesses like say a heart attack or kidney problems or anything of that sort. And you need to also factor in the inflation part. Today you may be hale and hearty. After 10 years, that 5 lakh covers, if you have a 5 lakh cover today, may not be sufficient after 10 years because the medical expenses are going up very fast. What normally I suggest is that you could have something starting with a 10 lakh cover or maybe 15 lakh cover, and increasing it. Today you have something which is known as no claim bonus. So if you don't make a claim for 2 years, your cover can actually double. There are such features in the policy. So your 10 lakh can become 20 lakhs for the same premium amount. It could become from 15, it could become 30. So that is the amount that you need to have as far as health insurance cover is concerned.
Interesting. We have another question, but we have Yamini. She's raised her hand. So, Yamini, do you want to go ahead, ask your question?
Yeah, hi Shaili sir. Hi Ritika.
Yeah, hi,
So
Yamini.
Shaili sir, for a 40 plus bracket, what should be the amount that needs to be invested for a 40 plus bracket? I hope my
The
voice is
amount,
audible.
like I said, someone who is 40 or, ideally, like I said, you need to have that at least 40% of your salary or your income being saved, okay, and invested. Okay. Now, the exact amount will depend upon, what kind of lifestyle, sorry, what type of goals you have. Typically you will need to build corpus for your children's education. Today, there are three levels of corpus that gets created for children's education. One is the school expenses, which are super high. Then there is a graduation corpus. There is the post graduation corpus. Okay, so you need to build all this. So you need SIPs for each of these goals. Then you might want to get them married with a lot of celebration. You need to have a separate budget for that, and of course your retirement. Understand that for each of these you will need a separate SIP, and together that should be it should be going from your salary. Now, for someone who's starting this for the first time, may get very overwhelmed that, बाप रे कैसे होगा? हो जाता है. You need to get onto the path. And, if you are very serious about it, disciplined about it, you will definitely make a way.
I hope that helps.
Thank you, sir.
Yamini, otherwise, sir को आके पकड़
Yes,
लेना
yes. सामने ही बैठते
आप. Okay. We have two more people who raised their hands, but there's somebody, Ruchi has asked, so let me take her question. PF deduction amount is fixed, or can we ask the employer to increase our contribution? I think after your point, Sailesh, that PF compounding hota hai, paise zyada bachte hai. I think now Ruchi wants to know, can she increase that amount? Can she go and tell her employer to increase it?
Obviously, employer will not increase his cost. Okay, it will come from your salary only, but you are allowed to increase your contribution. That is how it
So
is.
go and check with HR and check what you are contributing currently, and you can go and ask for a higher number. Obviously, it'll get deducted from your salary only, but yeah, you can see if it's working, compounding for you for the later stage. Okay, there is one person who is complaining, my basic is not 50% of my monthly salary. Why? I think that Ranvijay will have to connect with HR and understand on that. Um, my basic is not 50%. I think we'll connect with you on this and we'll see. Is NPS deduction allowed under the new tax regime?
Yeah, it's NPS is allowed. There are certain, I will not remember the exact percentage, but yes, it's allowed.
Pramod, hope that answers your question. We have two hands up, which is one is Tejashree and Mohan. So Mohan will come to you later. Tejashree, she's coming first. So go ahead with your question. You will have to unmute yourself.
I hope I'm audible now.
Yes.
Yes.
So I just wanted to know that there is an increase in the salary, but the in hand which is there has not, gone up much on the higher side. So I want to know, is it what kind of deductions does it have? Is it because of the tax or if it's because of something else? So how do we find out that?
So you need to go and check your salary slip. There will be obviously, you will know what kind of deductions are there. So normally, because the income has gone up, the TDS element will also go up. There could be higher contribution to the EPF. There could be, you'll have to check whether there are deductions by the employer if they are contributing to NPS also. So you need to check that. That is why this whole session was about, knowing, how to decode your salary slip. So your answer will be there. You need to check that, and if there is any discrepancy you find, or you need any clarification, your HR will be able to help you.
Thanks, Alice. Thanks.
Yeah, so you have to go and decode and understand. It's written somewhere, but go and find that what's
Sure,
written
sure,
where.
sure, sure.
Thank you.
Thanks.
Okay. We have one question and we have Mohan waiting. So Mohan, you go ahead with your question. Then we'll take the next last question for the day.
Okay, I'm audible. I'm audible.
You are echoing.
Okay, now.
Once.
Can you hear me, Ritika?
Yes.
So, my question is actually to Sanish. Sanish, I want to know, how do I get back to being 25 again? So I could start an SIP at that age.
Okay, I think very difficult question. Uh, I think you while you can't go back there, Moin, you you still have time. Okay, I know that, and you can still cover up if you're feeling that you're not really adequately saved. I think if you realize it, the purpose of this session is met. So. But yes, on a very serious note, like I said, not many people are aware, and they may have not really, thought about the investments like we say. But you still have time, and you need to make the best of it. Uh, it is little challenging at the start, but believe me, once you I just want that what you can do is that you should start additional SIPs, and once the money gets out of the account, you will learn to manage with the lower expenses. I hope that answer is simple. I am difficult to implement.
Or you can wait more until the time I was saying time machine thing comes in. That time you can go back and you can invest. Or as Salif said, If he gave an example that back then you were investing 10,000 and today you're starting, maybe you can start with, Salish, what would be the amount? 50,000?
I am not sure. We'll obviously have to see. But yes, the again to repeat, my favorite line, 25 to 35 is your power play. If you understand cricket.
Yes, so we have two questions. Okay, there is somebody asking how to transfer PF from previous company to present company. What are the steps to follow?
No, you can, that is very simple. I mean, there is a form to be filled, and today there's a portal. You can go to the PF portal, and you can, it will be simpler because everything now is held digitally. Okay, earlier it was physical, and we had to
Yeah.
write a letter and get it transferred. It should take some time, but it should happen for sure. But it's very simple. If you just Google and I think it is made pretty simple now. And earlier it was difficult to, we had to apply and get the certificate. What was the accumulated balance? Today you can log in and check the accumulated balance also. And I would urge everybody to at least log in once every quarter to see, how's the PF amount growing.
So very, what do you say? The portal EPF or whatever that is, it is one of the difficult portals to understand, to navigate. But as you rightly said, earlier the things were really bad when you had to, given the documents right and get the approvals done. Now it's all digital. So all the best, Shilpa. Hope you'll be able to do it, or you can even speak to your HRRM. She or he should be able to guide you there. Is employee pension scheme facility available with Novama?
Yes, employee pension scheme. There is nothing, there's a contribution to the employee pension scheme, which is done as a part of the EPF contribution. So there's some element that goes as a part of to the employee pension scheme. So employee provident fund is one, that's the critical one, and then there's an employee pension scheme also. There's a small contribution, that basically is also, invested there. But again, the EPS, since you raised this, the technical answer is that you need to really work till 55, whatever that age, and after that only it is available to you.
You can check with the HR RM again here, but yes, we can also get you connected. So once we're done, we'll speak with you, Vishal. We have somebody who's raised their hand. I can't see the name. I don't know. JNN is the initial. Jitendra, would you want to ask a question? You've raised your hand here. You want to unmute yourself and ask?
Hi, good afternoon. This is Jitendra Nayak. Actually, I am an
Yes.
NRI, and I have just one question. Actually, it's about from your asset. What asset should be allocated to your something like residential apartment or building, residential plot, and in SIP and mutual funds, and in FD? Out of like 100 rupees, how to allocate in this assets? Asset allocation, I would like to know.
Okay.
Sure.
So this is a so again, normally when we use the asset allocation to keep it simple, so we use a rule of thumb again, 100 minus the A should be equity. Now, we have always maintained that gold also should be part of your portfolio. So maybe 5-10% allocation to gold. Then, whatever is left can be allocated between equity and debt. Coming to real estate again, forms a very, very important part for people who are very much keen on properties. Normally, we say that between equity, debt, and real estate, if you have to break up the amount, then you need to have at least 30-35% to real estate. Because we see that wealth creation potential lies only in equity as well as real estate, provided you do the right investment in equity as well as you pick up the right property. But then you get faster capital appreciation in equity and real estate. So need to carve out something out of the equity for real estate, and then something for the debt. Gold can remain static around 5-10%.
Great. So I hope
Thank
that
you. Thank you.
answers. Yeah. Thank
Yeah,
you so
that's
much.
perfectly fine. Thank you.
Okay, so I think we're done with all the questions, and there's a lot of chatter happening. Default SIP from first salary itself. Kash blue bindi session कुछ साल पहले start होते. I wish. But ठीक है, देर आए दुरुस्त आए. Moin, that's for you. And for the others who've not started. So if there's any more questions, anything that you would want to know around this topic, please write to us. Salish, thank you. Thank you very much for this engaging topic. I'm pretty sure a lot of from where we started to where we are today, or right now, 4 o'clock to 5:15, salary slip, decoding. I hope we contributed in making you all understand the structure. And the next time we meet, we don't have people coming and saying, okay, can we go back in time? But actually coming and saying, guys, we are building wealth and we can see the money growing. So thank you, Salish.
Thank you,
Thank you,
Ritika,
Mohan.
for having me. And I'm sure, I would like to ask the question next time: how many of you really started your SIPs or increased the amount? So next time
Yes, yes, we
you
will
can
check.
tell us.
Yes. So
Thank you,
thank you,
Ritika.
everyone.
Thank you, everybody.
Thank you, everyone. Thank you, Abhishek. Thank you, everyone, for joining in. So we've understood one thing today. Your salary is not just an income slip, an income statement. It's your behavioral teacher. Okay. So you make sure you understand it better. You're more confident about your money and you start investing, because that's how you will build wealth for yourself. So until next time, do follow us on Instagram. Blue Bindi is our handle. And if you want to go back to any of our earlier sessions, we will be circulating all our YouTube links. So please do watch them. Thank you so much. Thank you. Have a lovely evening, guys. Thank you. Bye bye.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.